My name is Subramanya. I'm co-founder and CEO of Fisdom. We are a digital wealth platform offering solutions across savings, investments, and taxation. So I'll just request Atul, Mukesh, and Shripal to just do a quick introduction, and then we'll get going.
Thanks, Subbu. My name is Atul Shinghal. I am part of a team at Scripbox. We are a digital wealth manager, and for us, digital is not online. I mean, online is obviously a critical part. We describe digital as data, science, math, algorithms all pulled together. And our basic desire is to manage our customers' money in a long-term manner. But we'll talk more about that as we go along.
Yeah, hello everyone. I'm Mukesh Kalra. I'm the founder CEO of ET Money. Pleasure to be here, though we wanted more people around to actually make it more exciting. But I'm sure Subbu will make it exciting. He will put us on the hot seat. He's done that multiple times. So what we do at ET Money is we enable Indians to invest in mutual funds and direct mutual funds, which doesn't have any commission baked into it. We are the largest platform on direct mutual funds in the country. Drive close to 600 crores of new investments every single month, close to 400 crores of SIPs every month. On an average, we have 20% market share on SIPs in the online space. So it's been a great journey. We actually enable a lot of Indians across the country to build long-term wealth. The other aspects of managing wealth, which is retirement, NPS, we are the largest player in the online space. FDs, we drive a very big number on a monthly basis for the set of consumers who want a cushion against equities. We also recently launched a product called Genius, which is an advisory product, which helps you invest in a set strategy. We will talk more about it as part of the discussion. So yeah, so it's like we are very, very excited with the growth that has happened in the industry for the last 5 years, and we have been able to ride that growth a lot. So yeah, happy to discuss more.
Thanks. Good morning, everyone. I am Shripal Shah from Kotak Securities. I oversee various functions like product research and operation finance at Kotak Securities. Kotak Securities is a traditional player in the today's fintech world. We are more than 30 years old into the stock broking business, bank-backed brokerage house. Being an incumbent player in this space, we have been having all the traditional offerings, which includes branch-based broking, more than 200 plus branches, more than 500 franchisees would be offering broking services. Since last 5 to 7 years, since the digital push has come in, we have started offering all the products, including equities, mutual fund, IPO, debt, etc., through the digital space, through website, mobile app, etc. also. So, very interesting phase we are in here, having seen the traditional part of the business where digital was nowhere. From that, now everything moving into digital. Very excited to see the fintech space where all the new innovators are here and offering very, very unique solutions, trying to sometimes copy them, trying to sometimes learn from them, and trying to make sense of how do we start with the domain and go to tech versus how do we start with the tech and go to the domain. And then beautiful conversations happening, and I'm sure we all together will be able to offer a very unique and value-added solutions to clients' need. Thank you.
Thanks, Shripal. So we have a fascinating panel here. We have two pure digital players. We have a traditional player who's becoming digital, and we have a digital player who's bridging the gap between digital and physical. So this is going to be exciting. So just to get some context on wealth transformation, right? The numbers are staggering. We've had like 10 crore demat accounts and 13,000 crore monthly SIPs, 40 lakh crore MFAEM. Irrespective of these numbers, it still feels like we're still scratching the surface, markets are still there. So maybe Atul, I'll start with you. The problem of access, if today any Indian wants to start investing, that problem seems to be solved problem in terms of KYC and all of that. When we started, I remember you and I were doing innovation on KYC, right? That we don't need to do anymore, thankfully. What's next? Like, where do you think is the next phase? Is it product innovation, cost disruption, awareness building? What's the next wave coming up for all wealth players?
So I think, again, this is a biased view because that's the business we run. We are a wealth manager and not a transaction platform. So in our our sense is that the next 10 years is a lot more about wealth management. And wealth management is basically a 4-step process. You understand the customer's requirements, you create portfolios in a digital manner, you execute and you review on a regular basis. And I think this full stack of wealth management is where the future lies. We saw a lot of activity during COVID in crypto, in trading, in futures, the demat accounts you talked about. And I mean, like Mukesh talked about a large number of SIPs. But sticky money, which helps you put your children through college, sticky money, which helps you retire better, is where the future is. I'll lapse into Hindi. The traditional Indian mindset has been kitna deti hai, right? That Maruti ad. And I think that's the wrong answer for most people. Wealth management is about systematically investing with a purpose, not making short-term gains. I think that switch is where I think the future lies. It's the right thing for the country. It'll take some time. We are quite confident that the frenzy which we saw with all these demat accounts has brought in a new set of investors into the markets, right? They've now experienced capital markets, hopefully not lost too much money in crypto, hopefully not lost too much money in trading. And as they start realizing that this is actually a good place to be, they will trust more traditional wealth managers like us who use digital solutions to give them better outcomes. So the future, I think, lies less in access, less in awareness, but more in wealth management.
Thanks, Atul. So maybe I'll frame the same question to you, Mukesh, because you were one of the first guys to launch advisory, automated, customer paid. You know, everyone was on either on transaction platform. Most of us for a transaction platform come some advisory, but you went head on with advisory. I'll come to specifics of advisory, how it's working for you. But taking a step back again, what do you think is the next big wave? Is it advice or is it awareness? Is it product innovation?
Am I audible? Yeah. Okay. So the way one way to look at the future is what are the things that are coming together. I think SEBI recently came up with a report which actually said that 90% of the traders in the stock market actually lose money. There have been clear discussions between all the stockbroker CEOs where they're saying less than 1% of the traders in the country actually make more than 8%. So 99% of stock trading investors are actually losing money or not, even earning more than 8% or FD returns. So that's a very big, I think, unlock, because it's not great that consumers are losing money. But on the other side, a lot of consumers are now coming to a point that if I'm not an expert, if I don't actually stock investing probably is not the best for me. And that actually makes the shift to long-term investing more and more. As Atul was talking about, these are the behavioral shifts that will lead to more and more long-term wealth management or wealth creation journeys, instead of a quick buck that the get-rich-quick schemes that people have been always wanting. And it's just natural for people to be greedy. Like, it's not anything which is unnatural. But the point is that when you actually invest, and when you invest with risk, there is returns and there is risk also. The challenge that happens is, all of us actually end up maximizing for returns and are not open to seeing the downfalls, right? And now when the volatility is high, then automatically a consumer shift is happening. On ET Money platform, we are seeing much more long-term, investments continuing to be there. SIPs has been our large focus across the year. The growth has been very, very clear. So I'm just, that is one big thing that is clearly coming out. And when it comes to the focus on long-term wealth creation, as Atul was saying, how do you actually make those principles available to a larger set of audience? That I don't think has actually happened. As you said, the first phase was all about removing the friction from getting the consumer to start investing. I think that era is more or less kind of solved for in a very large extent, whether it is video KYC, whether it is setting up SIPs, whether it is, I think that stepwise innovations are actually done, but the future is going to be about aligning to consumer outcomes, and that means that you will have to actually figure out a way to deliver on the promise of either reaching financial goals or ensuring that long-term wealth creation is happening. So I think that's a that's a fundamental shift that has to happen, and it is already kind of in motion.
Yeah. Oh, thanks, Mukesh. Shripal, I'm going to ask you about the SEBI report that Mukesh mentioned. It's made a lot of news on social media that 89% of the trade, option traders, FNO traders lost money. Is it as bad as it looks like?
Yeah, if you look at the data, it is correct. The derivative trading and F&O trading, as we call it, yes, 90% of the traders seem to have lost money in this. There might be some nuances involved, but let's not get into it. The broader point is derivative trading, which is a leverage trading worldwide, the percentages are in excess of 75%, where if you end up trading, and because it is a leverage product, the returns and losses are magnified, and 75% people end up losing money. Now the question is whether can you equate it with the equity investment or the stock investment? No, but possibly what happens is that the moment this report has come, in everybody's mind, even stock is a loss-making business, but which is not the case. Other thing what I want to highlight here is that this derivative report which has come, which is not considering the fact that a lot of players also do some of the hedging or arbitrage business where their one leg of the position is in the cash market and another leg is in derivative market. If you stand and look at one leg of the transaction, it might involve loss. It might not be the actual case. But whatever is the case, the fact remains that if you want to look at the safety or the return of the investment, the lowest in the pyramid would be debt. You start with the debt, you get fixed return, there is no risk, but rewards are less. You go chain up, you go to mutual fund, then you go to stock trading, then you go to maybe commodity currency trading, you go to derivative, you go to options, and people go to even crypto. Now there are various layers in which people go today. What we have seen is that the new generation which is coming to the market, and in their mind, investing and trading, everything is similar. They start with maybe crypto, learn hard way, come to derivative, learn hard way, come to stock, learn hard way, come to mutual fund, and then maybe to debt. So it's a channel, but the most important thing, what I see here is the opportunity. If there are people who are flocking to derivative markets in India, and for your information, NSE is today the largest derivative exchange in the world, 4th consecutive year. Now it's an irony that we are the largest stock exchange offering derivative trading on one side, on the other side, we are saying 90% people lose money. Now we have to somewhere find a solution to this problem, and it can be opportunity, and in my view, the opportunity could be twofold. How do you ensure that we use education and innovation to ensure that all these traders are educated enough about the risk and reward of these trades? And second is, how do we leverage tech to solve this problem where traders can limit their risk while doing trade? And it is also about sometimes thrills and instant gratification that drives people to this trading rather than very passive investment. So I think we'll have to find a mix, and what we see here is that derivative trading will continue irrespective of this report or no. People have been losing money, but still they have been attracted to this. In fact, if at all we see the trend in last 1 year, the cash market volume on exchange have gone down drastically, and on other end, derivative volume is anything but going up. So I think there are trends that we need to watch and maybe offer a solution to the problem, and I think there is a huge opportunity to solve that problem.
Shripal, you mentioned about innovation. I want to ask you, each of you maybe start with Shripal on the regulatory aspects of it. The big trend over the last few years has been generally centralizing all the risks with the regulator. Like earlier, KYC was decentralized, verification, customer verification across all the products. Now it's kind of largely centralized. It appears that the signal most of the regulators, whether it is RBI, SEBI, are sending is, look, there are clear guidelines, stay within these lanes. So what does it lead in terms, what does it mean in terms of product innovation, right? So if we strictly follow the regulations, we offer the plain vanilla products, stocks, mutual funds, regulated products. But that may not satisfy the needs of all the customer segments. Some might require micro savings, some might require complicated products. So broad question is, are the regulations today or over the last few years aiding innovation, or is the general trend and go after standard products and do whatever innovation within those guidelines? I mean, any of you can pick this question. This is I know it's a tricky question about regulations, but it would be good to hear.
So my limited view on this is that the regulator has obviously got the investors' best interest in mind always. I mean, you have to believe that the Indian regulator is amongst the most progressive and advanced globally in terms of customer-centric and customer-first. And our sense is that for 98% or so of the market, simple vanilla products which are goal-based are the right thing to do. So I think, whereas, and you can do a lot of innovation there, right? How quickly do you create portfolios? How dynamically do you do a glide path? How do you tax optimize withdrawals? That's where the innovation should lie. The customer journeys, the customer experiences, that's what the innovation is about. And I sort of the market you're talking about, I think the most underserved and ill-served market in India actually is what you could call the middle India. The ultra HNI is well served by the relationship managers. The smaller ticket customers who all got access now have enough access to just come onto the platforms. It's the person between 25 lakhs to 2 crores, 25 lakhs to 5 crores, who still depends on paper, who still depends on a clunky system. And I think just innovation there is about smooth portfolio management, access. So I don't think you need to go outside the guardrails of the regulator for innovation. Innovation is in product within mutual funds, within the existing guardrails is the way we think about it. And I think there is sufficient headroom to create fantastic customer experiences and customer outcomes. Just using good technology, data, math, etc.
Thanks, Atul. Shripal, one aspect is innovation. The other aspect is just the cost of compliance. The joke around is that you have to dedicate like half of your tech bandwidth just for meeting compliance. Every fortnight there's a new consultation waiver, there's a new circular. So maybe could you comment on like what does it mean in terms of the industry's ability to offer new products?
You are right. There is a period of hyper-regulation, and it is for the right reason. I think the regulators are doing fantastic job of giving very tough job to the intermediaries to ensure that the interest of the client is taken care of. I think, in my view, the kind of regulation which is coming in, you mentioned half of the tech bandwidth is going there. In my view, it is more than that. Every other day there is a circular, and you are having to comply with it. But some of the things which I think we as an industry have achieved pursuant to the regulation is the unique in the entire global market. Nowhere in the global market that client is able to pledge the stock to the broker and in turn repledge it to the clearing corporation without losing the track and visibility of that stock lying in his demat account. Similarly, the new regulation which is coming where the money which will stay in client's bank account through the block mechanism, the money will stay in client bank account, but he will still be able to buy, sell stock based on that. I think those kind of innovative thinking itself is an innovation from regulator. It is a forced innovation which will make the industry completely safe for the client. Another thing is that in terms of regulatory broad guidance which we believe is that they are looking at, are you working as an agent of a client or are you working as a distributor where you are working as an agent of the manufacturer who is offering various products. And I think somewhere that advisory cum distributory guideline which is coming is very interesting and it is revolving very rapidly where even I see a lot of players changing their business model to suit the regulatory requirement. To that extent, it might restrict some innovation that was happening, but I think it is in overall interest of the customer that once you are very clear that are you agent of a client or are you agent of a manufacturer, in both ways you can offer innovative products. See, today in India, the problem is that the product simplification is not yet achieved. People still understand FD as a super easy product to go to. I mean, mutual fund still has taken off, but it took long time to even make for, and a lot of innovation has done a great job around it. So I think innovation will continue to happen. Regulator is forcing some innovation for clients' interest. Within that, we have enough room to offer innovative product and expand this market.
Shripal. Mukesh, you were the first ones to launch, as I said, user fee paid advisory product, if to my knowledge. So two questions. The common knowledge is general, we all believe, hey, it's hard to make the Indian customers pay for advice because advice is always available free. So two questions. One is, talk us through the propensity of an average Indian customers to pay for advice. And second, what are the challenges that you've seen in scaling advice? It could be personalization, whatever it, you know this better.
So I think I will just step back. We are talking about innovation and regulation and, a lot of things around it. But essentially, there has been a problem and a time bomb that the industry has been sitting on. And that is, I think, the misalignment of incentives between the consumers and between the service providers. And when I say misalignment, either the whole, one part of the industry is completely commission driven. So by any means, I don't see a fundamental way that it can be aligned to consumers. For a simple reason that if you want to maximize revenues, you will sell products which will give you higher commission. I can't actually accept any counter argument against it where the biasness will not come if there are commissions baked into it. Second ecosystem is all about transactions. So you're driving consumers to crazy amount of transactions, knowing the fact that 90% of the users are going to lose money when it comes to broking. So the whole point is that the industry has been always benefiting from this misalignment. Now regulators are starting to understand that there is a gap out there. And that's where the regulation are hitting everyone much more strongly, saying that you need to now change the ways and really align yourself or your business model to consumer outcomes, right? And only then I think a large part of the whole solutioning and all that will come in. So my whole point is that because there has been a continuous misalignment, it will lead to that hyper regulation kind of scenario, because we are seeing a lot of people losing money. And as the scale of wealth industry has actually become such a huge one, the regulators are more worried about what kind of systematic risk that can actually come into the ecosystem. So I think more and more push is going to be towards either removing risk from the ecosystem or aligning it more and more towards consumers' outcome, right? So I think that is one big dimension. The second is that when we looked at Genius, the genesis of Genius was a very hard-hitting fact for us when we look at the consumer behaviors which led to Genius. One is that we started seeing a lot of consumers creating a khichdi of their portfolio. When I say khichdi, because everybody is either pushing you to buy a product. Everybody in the last 3 years have been doing that to the end consumer. Now, end consumers in the chase of higher returns actually have mutual funds, stocks, crypto, gold, everything on earth that is possible. Everybody has one small sliver of it, right? And then what happens is after the portfolio reaches a certain size, whether it is 2 lakh, 3 lakh rupees, and in our data we saw that once the user hits a AUM size of close to 2.1 lakh rupees, the subsequent decisioning on anything related to that portfolio becomes extremely complex, right? So if you have 7, 8 stocks, you have 3, 4 funds, you have gold, you have crypto. Now, if you want to invest more, where you should be investing? If the markets are up, what you should be doing? If the markets are down, what you should be doing? If you have to remove money from where the hell do you remove money, right? So there is this whole complexity that gets baked into by the very fact that there is a khichdi out there for almost every Indian retail investors in the country. And that's what the genesis of Genius was for us at 80 Money, that how do we solve this problem for the consumers? It was not with the intent that we want to actually have advice as a business model. It started with the whole thing that there is a consumer problem, and the beauty is that nobody was looking at it, and nobody still is not looking at it. So we are continuing to be, Yeah.
Atul, please go ahead.
Nobody in the sense that, not...
I would disagree with that wholeheartedly. Out of sheer bias.
That's great, it's great to have some disagreements.
Scripbox was always set up with the intent of providing, the way the regulations in India work in wealth management, it's either fee-based where the customer pays or commission-based where the manufacturer pays. Because of the changing regulations, the nature of the Indian industry has been that it's been commission-based. But I think this fundamental allegation that all people who are MFDs or mutual fund distributors are biased has to be removed. I mean, now I've been in the industry for 10 years. We can tell you we don't negotiate commissions. At a policy Scripbox level, we don't negotiate commissions. It's an algorithm which pops out which funds come onto the platform, and that's it, right? And we've always stood by that. And the reason we chose to go down the MFD route, because that was the right thing and the right regulation available to the ecosystem. I have met about 100 IFAs. We've acquired 9 or 10 over the last 2 years. And I can, with the hand on my heart, say that each one of them were absolutely customer-centric, were absolutely doing the right thing by the customer. Commissions did not influence their portfolios. I think this, yes, there is a lot of mis-selling. Yes, there has been historical misalignment of incentives. But I think there are lots of good people doing the right thing by the consumer. The second piece, I mean, we really admire Genius. It's a phenomenal product. Again, I think a lot of good wealth managers, and I can name lots of them, have always kept customer portfolios. Or because of regulations, you can't call yourself a wealth advisor, but they're actually advisors. They're called IFAs, Independent Financial Advisor. That's their name. And most people are true to the can. So yes, there is mis-selling. That's the reason I disagreed with you is that,
The idea
that
was
you
that
can create great customer portfolios with great customer outcomes while being a mutual fund distributor, because it doesn't matter as long as the total cost of ownership to the end consumer is fair, right? Whether you do regular funds or you do fee-based plus direct funds. Ultimately, the cost of ownership to the customer should be reasonable. Doing free and direct funds, that business model I don't understand personally, because somebody got to make money sometime, right?
I'll just come in, and Atulji, I completely agree with Atul. The distribution per se, I think, is not bad. If there is a mis-selling, and if there is a hyper incentive to sell one product versus another, that is what needs to check. And I think SEBI has been doing wonderful job on that. If you look at the insurance industry versus the mutual fund industry, the kind of cost and commission which is there on any investor is far lesser. In fact, as late as last week, SEBI also came out with some regulation where within scheme, they want to cap the commission that is being paid out. So I think you can still offer distribution product with a great insight what to do at automated advice. And there is a lot opportunity, and market has to deepen. At the end of the day in India, still 3.5 crore accounts are still active accounts. We might have 10 crore accounts which are there, but the yearly active accounts are only 3.5 crore, which is not even 2-3% of the total Indian population. So to push the financial product, I think there has to be a distribution. Advisory is a very advanced stage. It might come, it will come for the little HNI or MNIs, but at a grassroots level, you have to push the product, you have to push the financial literacy to be able to go to the next level.
Yeah. So I can counter that like crazily high. So let's look at the numbers, statistics. We already talked about everybody losing money in stock markets, right? Let's be clear about it. And second is that, by regulation, and the whole point was the genesis of regulation for distributors was you are an agent of the AMC. And when you are agent of the AMC, you can only provide incidental advice is what regulation says. Because SEBI also understands that if you are the agent of the AMC, you are bound to sell products of the company that you're agent of, right? At the end of the day. So, while there is a great amount of, good IFAs, lot of respect, I've learned a lot from them how to actually manage it. But if you look at the statistics today, there are close to say 30 million investors in the country, give and take. People talk about it to be 50 million, whatever number. But our sense is that on a very conservative basis, it will be in the range of 25 to 30 million users, put together the whole industry. If you look at the number of investors who have availed of any wealth management service, not distribution service, wealth management service, that is 1.5 lakhs in the whole country. And why that gap is there? Because distribution commissions are always hidden. Nobody knows where the money is coming from, how the money is going. Now, the whole point is that we are seeing, on one side, we are seeing very clearly seeing that, consumers are losing money. And on the other side, people are not even availing those services of, wealth management simply because the costs are upfront, right? And everything is hidden. So the whole thing is, the structure is such that the biasness will creep in. However, whatever you do, the biasness will creep in at some point in time to maximize revenue. Was my large point.
So fair point. I think that's a good disagreement to have. I think the only caveat I would add, Mukesh, what you said is, I think what Shripal said is
The only thing was that why would SEBI restrict a distributor to not provide full-fledged advice?
No, it doesn't. There are like,
It
you know,
doesn't
there are, you know, even the advisory model, even on the advisory piece, SEBI had to come down heavily on the pricing because even the advisory piece was being misused by doing, you know, exorbitant pricing.
Because it was combined with,
No, even just the
commissions
advisory
and transactions. That
even
was the
just
problem.
the advisory, they had to clamp down and say only up to 2.5%, only maximum this much. Because even just the advisory model, there were parts of the country where people were charging like 5% advisory fee. You know, this happened, right? So I'm saying, so it's less about advisory versus distribution. It's just about someone wants to take the customer for a ride. He or she will find a way to take the customer. Anyway, look, this is a long debate. So I'll just move forward to the. We'll continue the conversation outside. So Atul,
Just to spice up the discussion, guys. Nothing against any.
no, this is a long debate. I think this is something that all industry participants are thinking through. You know, I probably want to talk about the EOP regulations as well, but that's going to take a little longer. We may not have time.
The only closure is that, on that topic, I know you want to close it because it's controversial, but essentially that it is great thing. It is a great thing because now every business, everyone will have to align themselves to consumers, right? So eventually that's where the innovation streak is coming and will come in a big way. So that's a great thing about the ecosystem itself.
I agree. Atul, HNI segment. I think the most of the access place that we talked about was about retail, access, etc. Right? I know you have a large footprint on the 25 lakhs to 2 crore segment. So when we look at the segment, we also at Fisdom have a private wealth piece. It's significantly still, offline. There's a bit of a dashboarding that's available, but otherwise it's largely still RM driven. What do you think can change in this where human relationships or human-led interventions can be replaced by technology, and what timelines do you see for this one? Think of it as someone who is investing a 50 lakh rupee or a 1 crore rupee.
So it depends on where the customer began, right? So there are two kinds of customers who've had wealth management services, had an IFA. They take slightly longer to become fully digital. And digital, I mean self-serve. They're logging in, they're reviewing their portfolio, they're following the suggestions or recommendations we are making on the platform. They take slightly longer. Customers who are first time, who've been, so there are three kinds of money. There's unmanaged money, who don't want to touch their money, they let it be in fixed deposits, they have this kitchery. There's self-managed money who are trading actively, and then there's managed money like people like us. So people who come into sort of starting to invest, even if it's a 50 lakh rupee check, we see quite a few of them, and we've got nearly, say, 10,000 customers with more than 10 lakh balances who self-manage their money. On the other side, what we are trying to do on the RM-led model is actually digitize as much of the process as possible apart from the human emotion. So this is an industry of fear or greed, right? Should I invest now? Is the market too hot? What should I do next? I've just sold a house, what should I do? And those decisions, people want to talk to somebody, right? While they will follow the advice, which is digital, they will do the experience digitally, we need to enable that conversation for the RM. So what we are trying to do at Scripbox is digitize the RM, for want of a better word. So they're working on an iPad, they're talking to customers, and to avoid product sales, like Mukesh was saying, we don't have incentives, right? So at Scripbox, our RMs are not incentivized, they're just regular employees. So you can do a lot more, we're not there yet, hopefully we'll get there. But it depends on where the customer started. If the customer is used to a deep individual relationship, they take much longer to transfer to the platform. But people who start at a 10 lakh rupee balance, they're able to write a 50 lakh rupee check much faster once they've experienced the platform. I think in the next 3 to 5 years, we'll see a lot more people being self-serve. But self-serve is not DIY. DIY is that I decide where I want to put the money, which I said about self-managed money. India is a DIFM market, do it for me. They want to be told which mutual fund to buy. They want to be told when to buy, when to sell. They want all that hand-holding, but you don't need a human to do it. You can actually use personalization on the platform. So that's a long answer to a short question.
Yeah, no, I think makes sense. I think dashboards are one way where people are moving, but still there's a sort of some sort of a relationship people expect that at least what we've realized is people who are investing 25, 50 lakhs, they may not want to talk to people, but they want to have a recourse to talk to someone, as opposed to wanting availability is important.
Sorry, so we call it, our SaaS model is status as a service, not software as a service. So it's the status as a service is what we offer on the person you can call.
That's a good one. Status is Shripal, question, sort of a meta competitive question as well. There are multiple products here, mutual funds, stocks, within financial services there is payments, insurance. So there are many players who are taking this whole super app approach, starting with payments, and then I'll offer everything else. It'll be the Paytm, phone pays of the world. And then there are some players who are just going deep into just one product, for example, Zerodha. Like I'll just offer the best stockbroking experience, or Scripbox. They've said, look, we will be India's best wealth manager, or ET Money will offer the best advice. Where do you think is the equilibrium? Like, what do you think is the Indian customer's expectation? Is it super app? Is it deep singular product? Somewhere in between?
Yeah, very interesting. In fact, we have seen both the model where you, on the e-commerce space, Amazon is there and Nykaa still make a niche into the best of the breed app in the beauty segment. So it still works, and if you look at stockbroking, trader would definitely like best of the breed application, which is only offering the trading without any noise. And definitely would not like to go to a super app to do a trading on that app, because when you are general approach, you will be diluting your offering. So, but yeah, on the east, if you go, whether it is China, WeChat, or Alipay, or Gojek in Indonesia, or Line in Japan, or even Kareem in Middle East, all of them would have graduated to multiple product offerings, and they are driving super app approach. But at least in India, I have not seen that very much successful. Some of the successful examples are there. PhonePe has been able to start from payment and start financial offering, and it is working for them. So there are various models emerging, but I still feel the niche players have a long way to do. Unless the market is deepened, niche player will continue to do so.
Good, thanks, Shripal. So I think I'm told we have like 5-7 minutes. I'm going to ask a few quick questions for each of you. Leaving the India story aside, which we keep talking about, what excites you about the wealth tech market the most? This is for all of you. Like I'll probably ask Mukesh and Shripal as well.
I mean, just the headroom to grow. I think just the headroom to grow in India is so huge. I mean, I can probably do a show of hands, and I can tell you 80% people will not be in this room, will not have wealth managed, right? So I think that's the headroom to grow. It's just so exciting for us to be where we are.
For us, I think the realization of people, of Indians actually understanding that keeping money in savings account is a sure shot way of losing it. Yeah, it's a very counterintuitive truth. That I think that awareness in itself is where the headroom is coming from. We are super excited about people being more aware that I want to actually kind of unlock wealth creation for me so that I can have the life that I want. So I think is a big excitement for us.
Yeah, on the last note, in India, in my view, now new user who is coming to the market is not looking at advice as to what to do. They want to learn what you are advising, how you are advising, what are the things to look at it, and have informed opinion. So I think they want advice come understanding of how this advice is to be applied, and maybe over a period of time apply their advice themselves. So I think they want to learn and then apply that, rather than being just told and to do that. Over a period of time, people just don't want to do what somebody is telling. They want to understand how to do it. So I think the model has to be where you advise, at the same time you make them educated and they take their own decision. And in my view, the last point is that I think stock, derivative, options, mutual fund, and crypto, everything will stay. Somewhere we'll have to ensure that people have a balance between them. Just to say that stock market, 90% people lose money, I don't think it is a correct statement or correct way of looking at it, because finally, when you invest into mutual fund also, finally you end up investing into stock. So that's the ending note. Thank you.
There's one more question I have. Maybe I'll start with you, Shripal. Yeah. Other than regulations, what keeps you up at night? Sorry? Other than regulations, leaving aside regulations, what keeps you as a fintech player, a wealth management player, up at night? What bothers you other than regulations?
Yeah, technology.
Mukesh?
We have this, what keeps us, all of us at 80 Money at night is we have this daily report which comes at 12:30 at night of all the metrics. And we kind of agreed to do it at 12:30 at night simply because we want to ensure that we are up at night. So, so that's a very weird answer, but.
Thanks. Atul, final comments?
I think it's reputational risk, right? We are in the trust business, and you're one big mistake away, especially as a technology player. One data breach, one untoward incident, nothing to do with regulation, and there are enough hackers out there. So what keeps us awake is that how do we protect our customers' money? Being a pure tech player, that's a critical one for us.
Well, thank you so much. Thanks, Atul. Thanks, Mukesh. Thanks. This was a wonderful discussion. We had good fun. We all know each other. This was like us talking outside with the coffee in our hands. So we just replicated that conversation here. Thank you so much.
Thank you, everyone. Thank you for joining us. Thank you.